Well, let's continue this discussion. Will Jack Frost send a chill over this holiday shopping season? Retailers and consumer staples companies have been warning of a slowdown in consumer spending in their recent quarterly reports. Here with some insight into where consumers are spending is Nik Modi, RBC Capital Markets Managing Director. Good to have you on the show here. So I want to first start with non-discretionary, the sort of the needs that consumers have right now. What are you seeing in terms of how they're spending there and what they're trading down and some of the perhaps the leaders in this space?
Yeah, it's an interesting thing. I mean, we've been kind of flagging a deteriorating consumer backdrop since actually late last year, because we were seeing a lot of movement and evidence within the marketplace, at least with the companies that we've been covering. So it's not like consumers are cutting back entirely on consumer goods or consumer staples consumption. What they're doing, and I think Walmart's phrase of choiceful is very appropriate. They are being very choiceful. They still want that candy bar, but they're buying a smaller size. They still want that beverage alcohol product or spirits, but they're going to 750 milliliters versus the 1.5 liter. So we're seeing a lot of pack size downgrade. We are seeing private label shares pick up in many categories across the consumer goods space. And in some instances, we're seeing consumers just make choices. I mean, we did a report recently where there are consumers that are literally skipping meals. And so you're seeing that impact the packaged food space.
And that raises the question, Nik, as we go into the holiday season, what this means for some of the other retailers, smaller compared to Walmart. If Walmart and Target are talking about more discounting going into December, what are some other names that you'll be watching for to get a real pulse on just how far the consumer is willing to go in this environment?
Yeah, so one thing that we like to look at, especially during the holiday season, is the beauty companies, right? Obviously, beauty, fragrance in particular, is a very popular gift item during the holiday season, but it tends to be on much more of the defensive end of what you would call discretionary consumption, right? So it tends to get impacted less than, let's say, a cashmere sweater, for instance. So we'll be looking for evidence of what's going on in that category. What we're finding right now in beauty is the categories are actually pretty healthy, but we're seeing some marginal trade down across price tiers. So we're going to watch that. My suspicion is if foot traffic comes under pressure, that will affect the beauty category, because a lot of that is also impulse consumption when you're in the store. So that, from my coverage, that's probably the discretionary end of the stocks that I look at. One of the other companies I cover, Spectrum Brands, they announced this morning, and they sell a lot of kitchen appliances, and that continues to be weak. So we're expecting that to be an ongoing area of sluggishness across a lot of the companies we look at.
And we also noticed you mentioned that, and also big ticket items we saw from the likes of Home Depot, seeing people pulling back on things like, some of these big home improvements, instead of making sort of slight changes there. Is that something that's expected to continue?
Based on all the work we've done with retailers, it looks like that will continue. And, what we're trying to do is get visibility on what the curve will look like in 2024. That's the work we're doing right now. So is this going to be much more of a first half dynamic where the consumer is kind of under pressure, but then when we start lapping some of the weakness we saw this year, we'll start seeing some improvements in the back half of next year. So what we're doing work on right now is trying to understand what the shape of 2024 will look like. If you really think about what's happening, right, outside of maybe some potential dynamics in the real estate market, what could effectively be happening right now is just a normalization of spend. So when you look at it versus 2019, things still look okay. But when you look at it versus last year, where things were really hot and heavy when it came to spending, you're seeing year-over-year drags. And so when we get into next year, will we see some of that subside? And so that's really what we're focused on right now.
So normalization of spend, from an investment standpoint, should stock pickers out there, should they be looking at this as kind of the new reality when you try to make those comparisons?
Yeah, I think at least for the next 6 to 9 months, I think we should be operating with the assumption that things will be under pressure. Certainly, even though we cover consumer staples companies, we've been very worried about promotional spend. We're starting to see that manifest right now, and we think it's going to get worse before it gets better, because we do think the economy and the macro picture will deteriorate over the next several quarters.
And I want to ask you about the growth that we're seeing in real income, especially compared to where it was last year. Goldman is predicting that growth in real income will be 4% this year, nearly 3% next year. That's your income adjusted for inflation. With that in mind, then, which companies are best positioned to really weather this storm heading into 2024?
Yeah, one of the themes that we're seeing across our coverage is actually not even category specific. It's really about experiences. If you really think what happened with all the Swifties during the summer, right? Experiences have really been driving the lion's share of consumption. So if you really think about it, it's bifurcated to experiences and basic goods. All the stuff in the middle has basically been where a lot of the weakness has been coming. And so when you think about companies and innovation, how important that is, the new flavor of energy drinks or that new beauty product, right? Or that new candy, Hershey's going to be launching Reese with caramel. Consumers are looking for new experiences. And that, I think, is really going to be the key theme for next year in terms of how companies perform. Who is innovating the best? Who has the best product in the marketplace? Are they getting the right shelf space? Right. So we think about a couple of companies under our coverage. Monster Energy, we think they have a very good outlook. We're very bullish on that company. Constellation Brands, they sell the Corona and Modelo Especial brands. They've done a very good job, and they've had some new product innovation that I think will be helpful to their business over the next 12 months. And then you can even think about some of the beauty companies like Coty, which is a company that we're recommending that has done a lot of innovation, especially in the influencer space. And we think that's going to pick up in 2024 as well.
Yeah, Cody, one that we've been hearing a lot lately. Nik Modi, RBC Capital Markets Managing Director. Good to talk to you on this Friday. Have a good weekend.
You too.